Forward with our guest editor, Mr. Sundararaman Ramamurthy. I'm going to first look at the BSE stock price. You've completed almost a year, 4th Jan, 1 year, and let's look at the BSE stock price in last 1 year. Change of guard, we always say that is what markets get excited about. In this case, I guess it's before you could finish the word magic, magic has happened to your stock in last 1 year, right? Let's look at the BSE stock in last 1 year. 300% return, 3 guna ho gaya. Are you feeling happy, excited that markets are or shareholders are endorsing your leadership?
The stock price is a culmination of demand and supply in the market, which comes from what market perceives as what currently is happening and what in future it is going to happen. From a stock exchange perspective, it is more like a ladle in a big pot of kheer. The ladle does not know the sweetness of the kheer. The job of the ladle is to distribute it. Whether it is sweet or not, the consumers decide. The same way we are doing what we are required to do as in charges of stock exchanges, and the purpose for which we have come, that is to make BSE vibrant with the able guidance of the market and the regulators, and probably the market is finding it okay that we are doing the right thing. That is why the prices are going up. That's the way we look at it.
They say in economics that there is one person who is right to win and the other players, they tend to get marginalized. That really was the big picture opinion when it comes to the Indian stock market exchanges. But you've changed it, you've tweaked it. You've gained the market share back in derivative market. Your distribution platform in a sense is now accounting for almost 20% of your total revenue. Was that a conscious strategy where you wanted to regain the market share back in the derivative market?
It is just not the derivatives market. The strategy was to make BSE vibrant. When we talk about BSE vibrant, people used to ask me, what do you mean by that? To have a meaningful presence in all the areas where we are currently present and we are not being looked at as meaningful. That includes cash, derivatives, currency, debt, SME, everywhere. In SMEs and mutual funds, we were actually having our presence felt a bit. In all the other areas, we are not. So the effort is on all the 3 areas to make our presence felt. And I feel the market is really big. And I therefore feel it's not a question of only if one person has a right to win, there will be no other people who can coexist. I appreciate what you said, that it is a paradigm which was probably thought about at some point of time. Our idea was to prove that there is more space for people, there is no need for competition. Actually, if you are able to provide a product which is complementing each other, that itself would pave the way for coexistence and continuous growth. Actually, that's what we have proved, I feel, to start with. We have a long way to go, of course.
There is a paradigm shift in how transactions are done. When I was a child, I distinctly remember my uncle used to come to Dalal Street and used to tell me stories of the outcry system, the ring, the badla, everything was different. Then came DMAT, and now it is high algorithm and so-called internet brokerages which have taken over. But with each paradigm shift, the brokerage charges are coming down. With each paradigm shift, the market has started expanding. What is next in terms of a paradigm shift for exchanges, which could be a blend of technology and growth?
No, it's a very wonderful question that you are asking. From a place called the ring, first the trading shifted to the office of the brokers.
Yes.
Then it shifted to the office of the investors in the form of a CTCL package where there is a web-based trading or whatever it is. And from there now it has shifted to the pockets of the investors in the form of mobile trading. If you want to today commit a SIP, you don't have to go anywhere. With your mobile you can make a SIP done. So clearly technology has aided it. When you are talking about as next stages, there are a lot of new technologies that are evolving. I think it is time now to use many of these technologies in increasing and improving the safeguards that we are providing to the market. I'm not sure how much it is going to happen. It is a wild thought for me. If you look at it now, artificial intelligence and machine learning is improving in a big way. When today if we were to look at it and can we see patterns and have any surveillance concerns that can emanate, well told to us in advance so that we take measures, possible. And look at it this way, huge amount of data crunching has become very easy now with lot of machine capability. When we are talking about the number of investors growing, the investment pattern, what is that will be suitable for which investor? A targeted type of an investor education. Today we are carpet bombing. We are going and thinking that's what the investor would like to know, and we are teaching them that. Maybe we are teaching correctly, we are not teaching correctly, because that's not what he wants to know. So maybe an analysis of the data analytics could help in clearly targeting, oh, this type of a group in this place would require this type of a investor education so that they will be safe. It is possible. So these are all wild thoughts. They may materialize, may not, because time will tell you how much your thought has been in the right direction. But I feel this is going to grow. In the last 30, 40 years, we have seen a paradigm shift in a big way from where we are to where we are today. I think this is going to continue to happen in India with the type of growth we are looking at.
So looking at the crystal ball, 5 years from now, what could be the size of Indian equity markets?
Honestly, that is a very difficult question to answer. I'll tell you why. 5 years down the lane, nobody will see. I'm going to quote a sentence from one Hindi movie which I recently saw.
You saw Hindi movie, sir?
I see, of course.
Okay.
वक्त बदलने में वक्त नहीं लगता है.
You saw 12th fail.
Yeah. वक्त बदलने में वक्त नहीं लगता है. So 5 years is a very long period for anybody to predict. If you look at it, what is in the next 1 year, next 3 years? Of course, 2047 tak, we as policy makers find the country nicely thinking as to what the market should grow. And the policy orientation today in this country is clearly taking us towards that. But that's a policy maker's orientation, so they have every capability to do it. For a person like me who is just a CEO of a stock exchange, to see 5 years crystal ball is difficult. What I certainly see is in the next 2-3 years, the number of SMEs that are coming in, the penetration what was talked about earlier on about the equities market and the equity culture and safe investment, debt instruments seeing something bigger, and some retirement product, which is just today only we have the NPS. We require more retirement products. I think all of this will be coming in very soon from a stock exchange perspective.
You know, given that we're on our way as an economy to become a $5 trillion economy, how are you looking at the overall penetration of demat accounts, and what do you believe will be the factors that will lead to a further rise?
No, it's a very good question that you have asked. The penetration has already started happening in my opinion. I'll tell you why I am feeling this way. As of December 2023, there are 9 crore PANs which are trading in the Indian market. Around 40% of them have gotten registered into the Indian market in the last 3 to 4 years. If you look at the profile of this people who have got registered in the last 3-4 years, it's very interesting. While Maharashtra and Delhi may be a bigger state contributing to the pie, but the growth is not contributed by Maharashtra and Delhi that way. It is being contributed by by states like Uttar Pradesh, Chhattisgarh, Bihar, Punjab, MP, Rajasthan. If you look at cities, no, it is Agra, Varanasi, Indore. These type of states are contributing much more. If you look at the profile of the population, around 80%, 75 to 80% of this increase in PAN which I am talking about are under 40. Around 40% of them, around 40% of the increase is less than 30. Young India, which is now having access to digital knowledge, easy access to information, online real-time free information, a wonderful regulatory atmosphere where investor protection is very important, and a very stable development oriented policy regime. With all this, the penetration is wonderfully happening. People like us, what we should do to further it is, as I said, go to a targeted place, talk about target. For example, if we see in some place there is a wealth creation happening, but not enough of mutual fund investments happening. Go there and tell, look, you know what, you all are creating wealth, maybe you should consider mutual fund investment. And the way in which if we could probably think about making debt instruments more popular, if every Indian could hold say 10 units of Government of India bonds, I think it's a great thing to happen.
Okay, BSE has, it is just not an exchange, it's got other platforms also, you've got other investments also. Star MF, it now has about more than 30% market share approximately.
Much more than that.
Much more than, I mean, in terms of the total aggregate kitty institutional put together, more than 30.
Correct.
How do you see the entire mutual fund distribution industry moving? That's where disruption is happening, that's where fee is coming down, and that's where commission structures will get challenged because of technology in AI.
Yeah, see here, the regulator, madam, has already clearly expressed her vision. The SIP should be 250 rupees. So that is the direction. Why it is very important? Today, if we look at it, the number of women folk getting into the market directly is still lesser compared to the men coming in. Women are capable of providing a stable type of an investment atmosphere. So how do we unleash the Nari Shakti? So that is going to be very important for mutual fund growth. And second is catch them young, is what we always talk about. Every college student who is going to just come out of the college, that is the right time to go to him and tell, you know what, at some point of time you are going to have a family, you are going to get married, you are going to think about your school, children, education and other stuff. Start investing in SIPs. So that could be a very big and important game changer, specifically targeting the youth and women and talking to them about mutual fund investments and propagating it is, I think, a very important thing to be done, and that will be the next step in my opinion. Once it happens, the menfolk of the household will automatically start looking into it, and there will be an overall healthy atmosphere of considering a long and stable investment which is not looking for returns tomorrow and today, which is looking for investments return over a period of time.
So I'm just going to come back to BSE, and it just resonates so well with us. It's not only India's oldest stock exchange, Asia's oldest stock exchange. Is that banyan tree story true, sir?
That's what I have heard.
Stock market started outside a banyan tree.
Under a banyan
That's what
tree,
I have
yes.
told. That appears to have been in the Horniman Circle. It was in 1875, Native Stockbrokers Association. And incidentally, from July 9, 2024, the 150th year will start, which is a big landmark from the time 1875 when National the share brokers formed as an association, and Native Stockbrokers started an association. It's a matter of pride for all of us as Indians that we are one of the oldest countries in the world to have thought about a stock exchange and put in place that.
No, oldest stock exchange, gem-utilized, fastest. I mean, one of the reasons I always tell people is that if you compare India and other emerging markets, you got to respect the regulator and the exchanges here, the kind of openness and the kind of transparency what you have. It's very easy to invest in China, but it is extremely difficult to just, take your capital back from China. I mean, that's unfortunately the entire way the framework of the capital market there is structured. Now, we are in January 2024. You say that we cannot predict what will happen next. But as a CEO, I'm sure you're planning as to how things would move for BSE for next 3 to 5 years.
Yes.
Your current revenue stream is 25% is coming from BSE cash equities. Mutual fund processing in that mix is about 10%. Fee-based income is contributing to a very large income in terms of treasury and fee-based income, 25%. 3 to 5 years, do you see the large revenue pie of BSE changing? If yes, in which way you think it will move?
I need to be very honestly putting across to you our thought processes in this. We as a regulated entity and also a first line regulator and performing the role of an MII, when we talk about strategy or future, we do not look at it from a revenue perspective.
Okay.
Because now we feel revenue comes on its own when you do things right. What is right is what is good for the economy. So if you're talking about next 2 years or 3 years or 5 years, the roadmap will be as my thought process emanates. See, first year it took for me some time to land on the ground and find my feet and start getting moving. I think that has happened now. 1 year is over now. This year, this year onwards, the concentration will be on SMEs, debt and mutual fund. They may not be revenue spinners, but they are very important for the economy. If you look at SMEs, they are the backbone of the Indian economy. It's very important to bring more and more SMEs to the fold in a nice, transparent way. How good SMEs can come to the platform so that they can find it easier to raise capital and grow. More and more companies should come there. That should be our endeavor. That is one important thing. In the next 2-3 years, that would be our endeavor to grow it. Next is the mutual fund, which we talked a lot about, how to make the penetration better, how to make every individual household, every woman thinking about if she has some spare money, how she can put it into mutual fund. If it's a young boy, he got a pocket money from his father and which he has not consumed anywhere, how he can think about putting it in mutual fund. That will be the thing. And debt is very important. We do not have a we need to have a very nicely developed interest rate curve in India, because that will pave way for multiple interest rate products which will be helpful for corporates when they grow in size in India. So it's very important to develop debt market, and we should do all the things that are possible in 2 areas, government debt and also corporate debt. These will be some of the important thought processes. Last but not the least is social stock exchange. So we need to engage ourselves into the social stock exchange area, how we can encourage through a centralized mechanism people who want to give back to the society. They need not be big. Don't we all feel that when we are walking on the street, suddenly we are happy, we have 50 rupees in our pocket, we find somebody needy, don't we give it? That's the way social stock exchange should be. Anybody wanting to give back to the society should have a platform where they will be able to come and donate and say, look, you know what, this is my small contribution for the society. How do we enable it? What should be the structure? These all should be the areas where I think as MIIs we all should be thinking in the next 3 to 5 years.
A lot of believers and old-timers of BSE are saying that, okay, the definition of Bombay Stock Exchange is that it is the oldest stock exchange in Asia, but suddenly it is now moving like a fintech, both in terms of technology, adaptability, and the kind of revenue streams they are holding up. So do you think, while we may think BSE is old school, but in terms of an adaptation, it is now working like a fintech? It's very nimble. It is investing a lot in terms of technology. It is making speed as its unique USP. And then again, if I look at the platforms which you're developing, pretty much you're building up a distribution model. So is BSE a fintech now?
Whether we accept it or not, every stock exchange, every MII is a fintech.
Fintech, okay.
It is dealing with finance and it is a technology company. So the moment you start thinking that you are fintech in that perspective, you will be innovative. You will be trying to find areas where we need to be continuously on the run. I think not only BSE, everybody in this country need to be adaptable to changes, looking always forward to see how best they can put their best foot forward and be nimble. I think that's a reality.
Okay, so hold on to that thought. Lots more to talk about. We're going to take a very quick break. But when we come back, we'll exactly talk about as to how exchanges can grow businesses, what's in store for the mutual fund industry, how is it that mutual funds can now only increase equity participation and penetration forward, and who better than Radhika Gupta, MD and CEO at Edelweiss Mutual Fund, right after this short break.